Good morning. For Traders Exclusive, this is George Tkaczuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. What we'd like to do is take a look at the equity markets, and the equity markets continue to act extremely constructive. Meaning last week was pretty much a flat week across the board. The S&P and the NASDAQ both hovering right above or slightly below their 50-day moving averages. However, they haven't reversed and crashed from kind of a V-shaped recovery off the early June lows. That's a very important thing. If you remember last year, through October, September, November, December, anytime the market had a little bit of a V-shape, it reversed the other way, shot right back down. And now actually what we're seeing is the markets just moving a little sideways, digesting those gains, and that's a very healthy thing. That's what the market needs to do. Now, we've talked in the past a lot about the software sector. That's been the hottest sector, and it continues to act very well in a lot of stocks. So let's take a look at another sector, and one of those is the medical service sector. It's acting very well, and specifically want to take a look at two stocks. One is Guardant Health, symbol is GH. Came public last October, pretty much shot up to $40 and moved sideways while the market was correcting that whole time through October to December. And then through the start of the year, pretty much the stock shot up from about $40 up to $100 in 2 months' time, which is a huge move. And now it's consolidating, creating another base, and looks like it's creating the right side of that base. And here's a place where one can nibble it. Now, this isn't a trade recommendation, just something you should take a look at. Always consult your financial advisor. Anyways, Guardant Health, symbol GH, is trading right about $90, $88. And the way to pick it up is don't buy the big up moves because this market continues back and fill. But look when it pulls back to maybe the 10 or 20-day moving average, buy it off of there, and that's kind of your low-risk entry. If it fails at those levels, you know, you can get out of it. I like Guardant Health because it had some huge increase in revenues over the last few quarters, up 95%, up about 57%, and up about 124%. So there's some big moves. Now another stock in that sector is Neogenomics. The symbol is NEO, and also pretty much just trending up, bucking the trend, showing high relative strength, trading right below $24 now, 23 and change. But again, don't buy the big up moves because it always comes back and fills back to this about 20-day moving average, which is probably around the $22 area. So not until the market gets that really high pop phase going, you don't really want to buy the breakouts, but it's very good ideas to buy it on the pullbacks. So these are just two stock ideas. They're not necessarily trade recommendations. As for full disclosure, I do own GH, but just stocks that are holding up, showing good relative strength in a sloppy market and continue to trend higher. Those are the kind of stocks you want to buy in the pullbacks. But as always, let price and volume be your guide. This is George Tkaczuk for RCM Wealth Advisors, wishing you a great trading day.